All right, good afternoon, everyone, and welcome to the Contract Development and Bonding Program's 3 C's of Accounting workshop, Understanding Cash Flow, Governmental Compliance, and Financial Statement Clarity. Some of you I know, some of you I don't, but my name is Carlos Ray. I'm the Program and Marketing Coordinator for Meriwether and Williams in the Contractor Development and Bonding Program. And before we get started, and with our workshop with Ed Gines from StrategicCFOs, I just wanted to go over a few housekeeping notes, and I'm sure we've all been on Zoom over the last few months, so you kind of know this stuff, but just wanted to repeat it just so we're all clear what's going on. So
Can't hear you. We can't hear you, Ray.
Carlos, we lost your sound.
Oh, okay, I'm sorry, how's that?
Yeah.
All right, let me start over then. Okay, here we go. Sorry. Welcome to the 3 C's of Accounting workshop presented by the City of Los Angeles and Metro's Contractor Development and Bonding Program. Before we get started with today's workshop, I just wanted to go over a couple of housekeeping notes. I know we've all been on Zoom quite a bit over the past few months, I'm certain, so this will probably come as no surprise, but I just want to make sure we're all on the same page as far as how today's workshop is going to go. So as you can probably see, we are in a webinar feature and webinar function. So the first thing, you're going to submit your questions. You can submit these at any time. You can either use the Q&A function, which we prefer, or the chat function. We'll be monitoring that as well. And please feel free to submit them at any time, and we can get those right into our speaker this afternoon. And so there's a survey that I will put in the chat towards the end of today's session that we would love for you to complete. This really helps us as we start to plan and figure out which workshops we're going to offer to you guys. So we really want you to take that. It takes about maybe a minute or so to fill out real quick, nothing too invasive or anything like that. So look out for the link in the chat box closer to the end of the session today. And lastly, if you need to get in contact with the Contractor Development and Bonding Program for any reason at all, here's our phone number, our email, and our website. Thank you to those who are enrolled in the program, and thank you to those who have just found out about us through this workshop. We'd love to hear from you and talk to you more about what the program does. So that concludes my portion. I'm going to now give the floor over to our presenter, Ed Gines from StrategicCFOs, who will be conducting today's workshop. So Ed, I'll stop sharing my screen and you should be able to share yours now.
You bet. You bet. Thank you so much. Let's take a look here. Let's just make sure this starts. And I'm pretty sure I haven't shared it yet, but I will right now. And screen 3. Share from beginning. Okay, just to make sure you guys can see the big screen where it says CDABP workshop, yes?
Yes, looks good.
Fantastic, fantastic. I'm Ed Gines. I just want to introduce myself briefly, spend about a minute or two at most. As we talk about cash flow, you see the 3 C's, cash flow, government compliance, and clarity, financial statement clarity. I am a CFO, and we have an organization here in Northern California. And what you see, I'll bifurcate. The left-hand side is us in the US, myself and 2 accounting managers. And let me get my pointer. The person in the middle, of course, is guess who, right? And we have 2 accounting managers side by side. We also have a division in the Philippines, Big 4 trained CPAs to support our US clients. We are pretty much in a 24-hour operation. We use Zoom, so we're very comfortable using this. All our clients are up in a QB portal called Right Networks, and we use Microsoft's SharePoint. We primarily focus in on QuickBooks. Mind you, if, for those that may know, there are two flavors of QuickBooks. They look very different. Not necessarily one's better than the other, but this was the workhorse for the past 20 years, whereas this has come on strong. And we used to say before, no thank you for other accounting software, but as we've grown, we don't quite turn people down anymore. So keeping that in mind. That's us, 24-hour operation. Some of the engagements we've been working on the past 180 days. Fancy words, but I'm really going to simplify this. Consolidated financials, GAAP on the US side, IFRS, International Financial Reporting Standards. It's a company out in Texas with its dev team located in Mexico. We see all kinds of stuff, and you'll get some laughs, and I really want this to be a dialogue, and you'll see it later. I've literally spoken with one client and says, Ed, guess what? I have to drop 100,000. 100,000 what? $100,000 in cash. Where? At the Board of Equalization? Are you kidding me? You're going into a backpack into the city to drop off $100,000 of sales tax. A little bit of a loose control, and I could see Carlos, your eyes just kind of light up. Yeah. Here's another company, 1099 theft, two elderly ladies. One of them had been working there for a number of years. Lo and behold, she's thieving the company through her 1099 and understating her expenses. Fraudulent. We have all kinds of other jobs here. Let's see, construction company using PEO. We upload all kinds of Excel spreadsheets into the QuickBooks file. We have some cannabis companies with 3 different entities and a dental cleanup practice. He didn't file tax returns for 3 years. More on the finance side, raise some money. Yes, it happened to be this one, $7.5 million on a 60 pre-money. We'll get into the construction. That will be the focus, but these are some of the PPP forgiveness, which is a hot topic right now. Thank you, Robert, for acknowledging that. If you guys need help, please, I'm here. Construction companies, I'm going to define it into 2, and I'd like to use simple words. One construction company owner was a little goofy, whereas the other construction company knew his WIP reports inside and out, over and under billings. And what a difference it makes in terms of profitability and the ability to know your own financials. And that's what we're going to focus in on more today. Today's topics, cash flow, compliance, and clarity. I asked earlier, please, let's have this as a dialogue, not a monologue. Ask those questions in the chat box. Feel free to interrupt if you'd like, but I really want to dial in on these 3. This specifically for construction. Yeah, I want you guys to get the maximum value out of this presentation, please. So feel free to interrupt me, and I'm going to try to keep this as lively as I can, because I think a lot of us say, accounting, really? Boring stuff. Well, it can be. In my world, the answer is no. Let's dial in, okay? We've got cash flow. And QB has modeled QuickBooks, has internal modules, cash flow projector, but think of it this way. Some younger people, like Carlos over there, probably doesn't know what Giga is. Maybe you do. That's garbage in, garbage out. Well, Giga, garbage in, garbage out. Bear with me, but it really, in accounting, if you do have garbage and you put it in, you're not going to get good reporting. But here are some budget to actuals. I'm hoping some of you are actually doing this. I'm hoping that some of you have built a strong internal organization. And I say this kiddingly, but I really mean it in other ways. Bank recons. Every morning, to avoid those 2 older ladies of thieving the company, you've got to do your bank recons. Because It's a necessity. Mr. and Mrs. Business owner out there, I say this with all sincerity. You've got to protect yourself. And if you leave the keys of the kingdom, we can talk about it at a different time, but if you leave the keys in the kingdom and you allow them to have the checkbook and you allow them to reconcile, you got to question, why are they driving around in a Ferrari now? Or subtle ways. Please protect your business. QuickBooks with Excel. I'll share with you some specifics, more on the fun side, right? Looking at the analysis, aging like a fine wine. Ed, what are you talking about when you say accounts receivable? I'll share with you through Excel. It'll be through a different screen page or a different monitor of mine, how we're going to do that. And current and quick ratios. Is your company getting stronger? Or is it getting weaker? And I'll share with you how to do that. I'm going to go over to this side as an example. Bear with me. I'm going to share my screen in a second. But I'm going into the Excel. And, oh, Lordy, just bear with me. I'm going to share my screen, a different one. And it's this one. There we go. And we're going to talk a little bit about, where's the other slide? Arrange. Thought I had both of them open. My apologies, just bear with me. This was there before. Okay. Look, here's a company that I was help consulting for. This is their accounts receivables. This is a live company we're talking about. And I'm going to have you focus in on the left side purposely. This is their receivables as of 2018 in May 7th. Their ARs read $3 million. And you go, wow, they're doing well. Now let's analyze this because this is your cash flow. Of the 3 million, 93% of it was sitting as current, or $2.8 million. Of the 3 million, 4.8% of it was sitting now due between 1 and 30 days, etc. So there were some laggers out here at 1.1% or $34,000 from these three companies. Again, this is live data. Mind you, it's aged, but it's real. And you go, well, Ed, how do you compare this back in 2018, May 7th, and compare it against 2 weeks later when there's a management meeting? And you go, okay, the first thoughts are, hey, I have 3 million in ARs on May 14th, May 7th, sorry folks. I only have 2.9 million on May 21st. You go, isn't this one better? And no, some things got paid, some things got added, etc. But look at the quality of your ARs. Again, repeating and looking at percentages, not at dollars. There's 100% of which 93% is current. I'm sure the majority of you are already starting to go, well, what's current 2 weeks later? Only 89% is current. Thank you, Robert, for acknowledging. And you'll notice the aging of 30 to 90 now consists of 5.2% versus the aging 2 weeks ago of 2.2%. You gotta watch your ARs, in other words, but you have to benchmark against how did it look before. So I'm gonna go back to my screen, and that phrase right here, garbage in, garbage out, really applies. You've got to put good data into the system so you can generate good analysis afterwards. And all we did was just summarize your ARs as an example. You may be asking current versus quick ratios. I'll share with you a different screen and we'll do that too. Just bear with me 1 second. Robert, any questions or thoughts? I mean, I'd love to hear commentary as opposed to me chatting.
Quietness. Okay. Nothing yet. So question while you're pulling up. So you're talking about with the aging accounts when it goes from 30, 60, 90 days. Now, does, some people have interest rates on those late fees. That's included in there, correct?
It can be, yes, yes. And on the P&L, we're already starting to recognize the pain for them paying late. Absolutely.
Right.
And some, there's a real toss up, Robert, between getting it paid timely versus interest cost incurred.
Right.
There's one or two things going on. For me personally, I don't charge clients interest costs for being late, but I don't want their ARs aging like a fine wine either. Okay.
Right.
Great question. I'm going to share what is Ed talking about when he's talking about current and quick ratios. Again, some thoughts. I have to stop sharing and share a different screen, which is this one, which is now prepared. And it's a sample file in QuickBooks where a lot of you are very familiar with the software, but I'm only focusing in on the balance sheet, right? And you could see what the balance sheet reads, to forget about the numbers temporarily, but the balance sheet at this snapshot point in time, this point in time, that point in time, etc. And I'm going then export it to Excel, and you'll notice it's the same numbers. Let me just hide this for a second. It's the same numbers. Left side, right side, now in Excel. But I'm going to share with you. Oops, didn't want to do that. Come on now, go away. All right, I'll do it this way then. I'll share with you what all of these ratios are and focusing in on the strength of a company. Now, mind you, this is a sample company. And you go, okay, Ed, what's the cash position? Well, there's your cash position right here, checking and savings, right? A pretty healthy company in its own way, unless it's a super big company. And here's your ARs, and you can see it right down here, ARs plus cash as the numerator, accounts payable as the denominator. And you'll see me use this. Hold on 1 second. It's right over here. So you've got your numerators of 100,000 plus 133,000 with a denominator of 962. This is a comical example that says you've got more than an abundant amount of cash relative to what you owe. 247 times. But notice what starts looking a little bit more clear over here, a more realistic picture. Again, this is a sample file, but you can see a more realistic picture. Hey, my AP is 41,000, yet my cash and ARs is looking like about 300 plus, 310. That's still very reasonable.
Mm-hmm.
But you'll see the difference. Yeah, feel free to comment.
Yeah. Hey, Ed, we have a question.
Yes.
So it's would you recommend QuickBooks software on the desktop or QuickBooks Online?
They are both available up in the cloud. If the question is a little bit deeper, I'm answering it that way. It really is flavor. The workhorse of what you see on the left-hand side of the screen, to me, has more available. It just works. It works stronger. Now, I'll tell you, the newer generation, the younger kids like you, sir, prefer the QuickBooks Online.
Yeah.
We can work with both. It's how you use the tool. It's not that one tool is better than the other. If that helps.
Which version would you recommend for a construction company?
Oh, now got it. Absolutely. go to desktop because they have specialized flavors just for construction. All right. Feel free to ask. Now, here's another benchmark. Well, this is just cash because, you know, the quality of your ARs. If it's bad quality ARs, measured a little bit differently relative to your accounts payable. You got to pay your bills. Everyone's heard of the word current ratio. Yes, current ratio implies what are your current assets. See the word assets there? Current assets versus your current liabilities. Now, if the number, kind of kiddingly, I think what happened here from January through March and then December is if the business owner saw these kinds of numbers, he's going to go buy a boat, right? That's probably what could have happened. Robert's laughing. But don't buy the boat. If this is going down from 7.5 to 2.5 in the future, you're getting worse. And I've seen businesses are at this. How in the world do you survive if it's garbage in, garbage out, if you don't know your numbers? We all get advances for contracts. And you really have to be careful with that money because you go, oh, I've got an advance. I've got 100,000 sitting in the bank. No, you owe.
It's already spent.
Yeah. Yes, perfect. Thank you, Robert.
Hey, Ed, we have another question. QuickBooks released a construction version. Do you have any recommendation or thoughts on that?
Yeah, I would use it. I think it's really critical. Later in this conversation, we're going to be talking about the WIP report for those that are managing multiple clients. I think what's really important over and above the construction version, I think that's more of it. You can make your QuickBooks sing. You should know your own job profitability, construction flavor or no construction flavor. You need to know your profit centers in terms of which industry you're targeting. And I'll share with that later too. Yes, get the construction. More importantly, get someone who knows how to use the tools. Because thank you again, Robert.
Yeah, I know.
If you don't know how to use the tools, it's like putting me in acting like a dentist and trying to take out your teeth. It's going to be painful if you put me in that position. You put me in a position where I can help, or someone, and you'll see why. I'm going to go back to the normal presentation, share. Any other questions?
One thing I would say is, you know, if you are struggling with QuickBooks, please don't wait until you're so far into it that it's going to take someone a long time to straighten out your books and your files. Ask for help sooner than later.
Yeah, good, Robert. And there's a reason why, right? We all see, just to confirm, there's some person wearing this orange, and yeah, there's some negative words there.
Before you get started on this slide, we had one more question come in. What is the dollar limit we can use QuickBooks before upgrading to another software like Sage 100 or 300? Bonding companies are requiring Sage or other more advanced software now.
I'm gonna answer that politely, but that's bullshit.
True.
Thank you, Robert. My apologies to everyone for using that. Look, if the books are right, they're good. You got to get them audit ready, lender ready, surety ready. It's not the software. It's it's how you use the software to represent the financial numbers needed to appease your bonding company. If you are getting that big, you are a big company. And I've seen some companies with 500 million, I've heard 500 million in sales still using QuickBooks. At that point in time, I think it's time to move on. But the software is time tested, it's battle tested. It does not need Sage. I think that's a sales pitch from someone who's supporting the bond company. So bear with me in my roughness. Last minute, Robert, thank you for nailing that. And I'm going to keep it focused here. Don't, because taxes are coming again. And here's the reason where I think a lot of small business owners challenge. Disregard the fourth one, R&D. But we as business owners have to allocate our time. If you are a hammer and nail type of contractor, you're spending all of your time here and maybe here and detest this. But if you are running the business, someone has to handle this. Do not run and just do this and that. It feels good until if you don't know your numbers. And even if you are profitable just by doing this and this, you could be even more profitable if you start using your finance correctly and use it as a weapon rather than a hindrance. You'll look, eventual exposure. If your books are bad, someone's going to figure it out. And unfortunately, it's the business owner who's going to pay for it. I say this because you can see I'm wearing a nice shirt. You can see I'm wearing something underneath it. But the reality check is, am I wearing shorts with this? That's your financial books. If they're lousy, they're going to be discovered rather than wearing the complementary pants that I'm wearing with this shirt. It's a reality check, and you know it in your own gut as a construction owner, whether or not you're underserving yourself in this area. Start compliance right. Yeah, these are oxymorons. Compliance and doing it right just don't really go hand in hand, but you have to find the time and trying to do it on your own and saying, I can handle this. I know a lot of very, very smart people that say, I can figure out accounting. And 6 months later, they throw up their hands and they go, I should have just hired someone who could do it better because I'm putting my own business at risk. Here's something that's not even accounting related, but Robert can attest to it. Here are some tax forms we have to worry about depending on the entity type. A lot of you may be under Schedule C under your 1040. Some of you may be as an S Corp, but these are general and administrative requirements that are filing purposes. Things get even more bogged down with regards to payroll. And the requirements do not even come close to trying to do it by yourself. Some of you sell product along with your construction, and you've got your sales and use tax that you have to file. Some of you have equipment or a location. Form 571 is declaring your business property, personal property that's business related, every year. And here's one that is oftenly missed, statement of information through the state of California. If you're not even keeping that up, you could lose everything, even including your business name. Any questions while I drink some coffee?
What I want to also state is know when these forms are due, because, like you said, you can lose your standing with your companies if you miss these deadlines with following with these forms. Mm-hmm. And there's penalties that are associated with it sometimes.
So I kind of have to go, thank you for that commentary, Robert. I have to kind of go back to this and say, wait a second, what are some of the general administrative stuff that I have to spend some time in allocating my time and resources towards? Because it will come back and bite you if you miss any one of these. With 2020 closing out, start assessing where you are right now, the current state of your books, the current state of your company. Everyone loves to do sales. Everyone loves to do ops. No one loves to do general administrative stuff, but start assessing your situation. Start talking to your tax preparer now. Because come January 31, getting their attention becomes very difficult. Hi, Rick, how are you? Prepare your files as best you can. And that way we'll talk about enhancing the structure of your books, how to improve the controls to minimize theft, or improve accuracy is really another way of favorably saying that. And use the software of choice and leverage the capabilities of it. There's plenty. If you're, I can almost give with 100% certainty, any company under $30 million can easily use QuickBooks and make it run like a cheetah. I mean, run like whatever, run. If this analysis, what about that? So I'm going to de-emphasize assessing the current state. Where's the rest?
There's another question there,
Yeah, of course.
Carlos.
Yeah, go right ahead.
Yes, it says, if an employee files for unemployment, how does it affect the company?
Wow. I mean, that's a great question. I've been blessed personally to not have to see that for quite a while. Your unemployment rate goes up, your UI goes up on your payroll, that for sure. That's one way to answer it, but that's such a broad stroke question. Is it in the form of PPP? Is it in the form of when they file for unemployment? It's too broad of a question for me to dial in, and I'm not an expert in HR or payroll. So if they can expand on that question a little bit more, I'll try, but I don't want to pretend. That's the last thing. Current state, is your AP/AR up to date? Are those expenses coded correctly? Well, there's your payroll, right? Unemployment. I'm hoping that the payroll company withdraws the right amount of unemployment from your reserve account. A lot of you may have never heard this. I'm hoping you have. AB5. Let me express it differently. We all just went through an election and we saw Uber and Lyft contest AB5. If you have people that are working for you and you are listing them as 1099, Assembly Bill 5 is really restricting them and can easily define them as W-2s, not 1099. So make sure, I'd rather be conservative, but sure, in classifying a worker. Are they under your control? If they are under your control, they're passing the sniff test of AB5 and they should be W-2. Year-to-date banks, estimated payments. This is how you minimize the pain of April 15th, may it be a sole prop or a corporation. That's good planning. There's that emphasis again on bank recons and credit card. It's the same story. It doesn't have, those two old ladies could have attacked it from this angle or this angle. I've seen it from both. I've seen some really ugly things out there which are not nice. Protect yourself via reconciliations with your coffee.
So Ed, I have an explanation to that unemployment question. And it's, will the employer have to pay out of their own business account, or does it come out of the EDD account directly? Is the employer directly liable to pay?
No. Okay, so I'm going to answer it with only the limited knowledge I have. I want to be very fair. I believe it's through the EDD account. We are not, because you've been building a reserve account every time you run payroll. I opened up my corporation 4+ years ago, and every payroll period, they keep taking more money out through the payroll payroll tax, and that being one of them. And every quarter, or is it every year? I think it's every quarter I get an EDD report that says, here's your unemployment balance that's available to you. I don't really go into it too deep. I've been blessed not to have someone file unemployment, but hopefully that answers the question, and they can ask some more deeper ones. The direct answer though is the UI fund, the unemployment insurance fund that you have been building up as an employer, will be deducted from it. And they will probably take more out now that you're utilizing that fund. Okay. Limited knowledge, hopefully that helps. If you're using QuickBooks, there's simple ways to just keep moving the file along. If you record an expense, record it, ask my accountant. We can all consolidate it and figure it out later. And other financial concerns that need to be addressed, right? What does a tax preparer need? Advanced dialogue, never hurt. But if it's last minute, he's going to put you at the last minute too. Those guys go through a lot of stress on the last 2 weeks before deadlines. Dispositions, Form 571 for disposition of an asset. I've seen a lot of companies overpay for their Form 571. Sure, maybe they acquired a different business. I don't know. Some of the basic reports that are needed. P&L and balance sheet. The better the quality, the tax preparer, the more detailed they want to go in there and help you out. My voice gets hurt.
So, question, with the taxpayers, you say, talk with them. Also, do you need to actually have hard copy backups of receipts and all that these days, or that's only when you get audited?
I've got a sheepish look over here, right? Look, conservatism tells me that you should have every expense substantiated. A good set of quality books, when it's time to be ready, has those associated expenses, an attachment with it, which substantiates that expense. After it's in, and if I may, I'm gonna stop sharing this and share my other screen, which is this guy. I could go into any transaction in here and you will find just randomly, again, this is just a sample file. You'll see this paper clip there. Once you scan it and attach it, it never goes away. Talk about a surety bond company. Now, mind you, we're in the micro area, they're really deep into give me the supporting document for this transaction, whatever it may be. Happen to be, it looks like a donation, right? Where's the supporting document? Attach it. If that helps, Robert.
Yes.
Okay. Any other questions in the interim while I go back to my presentation? Okay, back to the presentation. They need these reports. They're signing off on your credibility. Now, mind you, I'm going to be very subtle about this, but that engagement letter that they are signing, that a contractor is signing with the tax preparer, basically says whatever you give us is your responsibility. It ain't ours. It ain't ours. We're going to try to do our best, but they're your numbers, not our numbers. A side note. Let's keep going. There we go. Bear with me. Hopefully I didn't skip a slide. Yep. All right. People ask, what's a chart of accounts? A chart of accounts is basically the skeleton of the financial state of you building the financial statements. A well-built one has numbers attached to it, and you'll see it in the next slide. Later on, you'll see some, hey, how do you make this thing really shine by not having duplicative and minimizing or inactivating unused accounts. And I'll explain in categories. And I'd love to spend time on this next slide a little bit, because this is where some of the meat and potatoes will start developing, in my opinion. We're all in here for profit, for the most part. So your chart of accounts have to reflect in a certain way. All your assets are recorded as a 1,000 bucket, liabilities 2, 3,000 for equities. End of the balance sheet, below the red dot is your P&L, your income, revenue, cost of goods, overhead expenses, and then another one, net operating income is this where I'm drawing, but you can't see. Other income, other expenses. Ask my client, ask my CFO.
All right, we have a quick question for
Yes.
a chart of accounts. If we're a sole proprietor startup company, do we need a chart of account?
You should. Now, from a tax perspective, you don't have to report a balance sheet, which is what I'm circling. Where a lot of sole props, Schedule Cs, get in trouble is all they have to ever report is this area. This area. And they go, well, what do I need a balance sheet for? Well, that really tells you what's your ARs, what's your accounts payable. It's just less reporting on a Schedule C sole prop than in a corporation, but both should act the same way. So the answer is yes, a balance sheet is absolutely necessary. These exist regardless of you're running as a Schedule C or a sole prop, as the same as if you're a corporation or an LLC multi-member. Some of you might be saying, I'm an LLC LLC single member. You're basically a sole prop with some entity restrictions, or I'm not using the right word, but when you hear an LLC, the next question is multi-member or single member. If it's single member, you're a Schedule C, sole prop.
Okay. And then the next question is, what goes into cost of goods sold for a construction company?
Absolutely. We're going to address that in the next few slides, and just reach out if I don't answer it well enough. Give it about 3 slides and we're going to get there. But the cost of goods will be breaking down in much detail, direct and indirect, and I'll share with that later. Okay. But you can see, again, if you're building your chart of accounts correctly, I'd like you to focus in on 6,100 to 6,500. And you'll get more clarity on this later. But what percentage of sales are you spending towards your operations? What percentage of sales are you dedicating to sales and marketing? Or general administrative? Because now you'll be able to track year over year, hey, we only spent 2.4% towards sales and marketing. I think we should increase it in our budget for 2021. Or our ops are really expensive. What do we have? Well, we have 3 cars. We've got all the printers we've ever needed, etc. You'll see it. You'll see it if you develop your chart of accounts well. Here, it's unstructured. When you open up QuickBooks or any accounting software, here it is. And if you ever look at your own tax return, notice it's always alphabetical. That's not how we run the business. These are operating expenses. You kind of go, wait a second. Doesn't advertising and promotion really belong more in here, this area, in the 6,300 bucket? I'm just randomly picking. Bank service charges, sounds like a general administrative. Somewhere in here, I didn't point out other stuff. I'll randomly pick gas. Oh, well, I guess if it's from my truck to get to the job, it's either going to go as an indirect cost, which isn't shown, or ops maybe. Ops, it depends. Professional fees, of course, is going to be over in here for the attorneys, the accountants, etc. Right? So I think there's some extra clicks that I can do here. like telephone, look at it this way. There's some duplication. Clean up those chart of accounts. Clean up those chart of accounts. Make sure they're all sitting in the 6,500 bucket. What's the next slide, if any? Oh, no, let's see, internet, right? I don't know what that was for. Just bear with me. I mean, feel free to ask questions about this, but when you look at a publicly traded company, you'll see these breakdowns at a very high level so they can analyze. To answer your question about cost of goods, here it is. And will it be the next one? There'll be an example in a little bit of a hammer and nail, and I'll explain that later, but conceptually it's the same thing, right? Here's your cost of goods. There are direct cost, there are indirect cost. Sure, there's other, but let's focus in on direct and indirects. Just bear with me. If there's a question, I'd love to hear it right now.
No, we don't have any questions that I can see at this time, but please feel free to submit them as they come.
Yeah. So let's use that concept of a simple one. And it's really a hammer, a nail, a piece of wood, the worker, and the car that took them to the work site. There were only 5 things that we're talking about. The nail and the wood, of course, are materials as a percentage of sales eventually. So you'd see a number associated with the materials. The labor of that worker is here. So they're going into different chart of account buckets, although they are directly related towards the construction of a house. The hammer, the nail, whereas that hammer is a tool that can be used for other jobs down the road. And if by slim chance, and I'm exaggerating, not with 100% accuracy, but it's in my mind, if the hammer was $12 and there happened, and it broke after exactly 12 months, the cost of that tool was $1 per month. And so you would know it. You wouldn't spend it all out in, now mind you, that what I'm saying is very fundamental. Those that are advanced are probably going, Ed, you're wrong. And I know I'm wrong. It's greater than a year, or there's a 2,500 floor. But simplicity says to me that hammer, which is a tool, isn't going to be expensed out all in 1 month, nor is it a direct cost. It's an indirect cost of building the house. Okay. Contractors, they're either direct or indirect. You know, equipment rental, it's a different car. Let's just use a tractor as opposed to a car. But now you're going to start going, as a percentage of sales, what are my direct and what are my indirect costs associated? Because you can collapse. I'm going to share with you a different screen. The strength of any software. It doesn't have to be QuickBooks.
And while you're doing that, we have one more question.
Sure.
How do you differentiate service versus cost of goods?
It depends what industry you're in to begin with. If you are in the service industry, the waiters and waitresses are an indirect cost. Okay, I would love to hear more, or rephrase, say it one more time. Maybe I didn't answer it well.
Okay. How do you differentiate service versus cost of goods?
Let's see, which, I just want to make sure. So I'm still sharing this screen where you can see contractors. Service in itself, it depends. I'm thinking about the dental office right now, and there's the hygienist. They are absolutely cost of goods for that dental office. They're an indirect cost, but they are certainly, if they're not there servicing the client on the chair, They shouldn't be an indirect cost. They should be sitting somewhere in ops. So you can allocate your payroll. There you go. In the case of a dentist, and I'm sorry if I'm not using a contractor, when the hygienist is not working on the patient and doing other things, their cost of goods generally is under ops as opposed to indirect in helping build secure revenue. Because when they're using their fingers and cleaning teeth, et cetera, that's an indirect cost against billable of $150 for coming and paying a visit. Okay, I'll try to put it in contractor terms, but the dentist was the one that came in mind.
Question. So,
real quick, Robert, before you go there, I believe this person says they're an insurance services company.
Insurance services company. Wow. We don't handle insurance services company. We could take it offline and they are more than welcome to reach out if I can be of help. That one's a deep one that I don't think is appropriate that I try to take a stab at it right now.
Okay.
Okay. I'm going to share my other screen. Oops, that was the wrong. Hold on, hang tight.
Oh, Robert, you had a question?
Yeah, Robert, go right ahead, sir.
I was saying like professional service. So I guess they were talking about the services if they're professional, like a architect or engineer that's being, they have their own business in the construction. Like what is your indirect, cost, that's maybe in the office that's not directly associated with a client or a project you're working on versus, you've got your executives that's kind of like your overheads, but they're not working on a project.
Correct. So for sure, they're not above the gross profit line. Oh, notice, okay, I think I've just shared, you can see QuickBooks, right?
Yeah.
I think this is a great way to answer it. Now, mind you, this is a sample company, not a company that I would have built the chart of accounts as. But notice the ability to collapse and how simple it is to analyze. And you go, okay, 100% sales, 58% cost of goods. Underneath it, if you open it up, what I would prefer was direct and indirect as a subset. And then you go, well, what are the directs? And yet now you're starting to see the granularity and you're saying, well, I really would love to compare that against prior year. And remember the alpha? That is alpha. They do not have your ops, sales and marketing, G&A buckets that can be consolidated for ease of trying to understand a good set of financials. To repeat, direct versus indirect not shown here will give you greater granularity. And if asked, well, tell me about my own directs or my own indirects. Boom. Okay. You should be able to look as a contractor and break down what is my regular time versus overtime versus double time. What are my fringes? And what are my employer taxes by job, by profit center, by month? Is it going up or down? Again, not my set of books. Let me minimize the minutia. Let me minimize. You can tell all of a sudden you're focusing in on and you're going, okay, well, that doesn't make sense. Why is my gross profit only 10%? And the following month, it's 46. Garbage in, garbage out. And it is on accrual method. Why is my profitability all of a sudden 71% versus 10%? Got you all thinking now. The importance of financial statements is really what I'm trying to drive here. And if set up correctly, you can really go to town on this stuff. I'm going to switch screens. Is there another question? 2:27. We have till, I'm running out of steam, but I know we can keep going, right?
Yeah, we can.
Bear with me, guys. Yeah, any questions out there? Or Robert, give me a minute of you talking and your thoughts while I try to recoup my breath.
Oh, wow. Okay.
Thank you, Robert.
Ooh. So, we've been talking about the cash flow and your work in progress. And then one thing you mentioned about sole proprietors, what they really report is more on the expenses. But in order for you to, your build your capacity in your business, you need to know, your assets as well. So that way you can make a sound judgment on, if you want to go after certain projects or not. Because you can still look at that and say, okay, yeah, I have the assets to cover additional project without spending money to get assets to go after it. So you should know both sides, even if you're, sole proprietor.
Mm-hmm.
Just knowing everything, you can make sound judgments. And then also, just like if it's a high risk project, you can say, okay, yeah, I might want to go after it, but do I have enough cash on hand if that project goes south or delays?
Yeah, I've actually used these words a little bit similar to a contractor who didn't know their numbers well enough. And it's at the beginning of the project, and call it a 12-month project.
Mm-hmm.
And I said to the project owner, I said, wouldn't it be horrible at the end of the 12-month and that contractor comes back to me and says, Ed, are you telling me I made $2.48 an hour for the past 12 months at 40 hours a week? That's what I made? Well, did you do your WIP report? Did you do your cash flow projector? Robert, you're an expert at that now.
Yeah.
You were before. We just
Yeah.
kind of made it through John Miller. And thank you, John.
Yeah.
Thank you, Robert, for helping me. But if you could go back in time and says, wait, if 12 months from now, I'm only going to make $2.48 an hour, that's crazy talk. I am not signing off on that contract. Yeah, we just got confirmation from Robert. Thank you.
Yeah.
Classes. Here's another way of looking at it. What profit centers are you going after? Is it governmental work or private party? So you can tell, is it which area of the your P&L should be able to define all kinds of good questions that you may have. That's really a good set of financials, is what is my question and do the financials give me the right answer so it can guide me going forward, right? Which business segment am I going after?
And that also kind of goes back to your backlog too, with the business segments. Because, if you know what's happening coming up in certain segments of the business and the markets, you can build your backlog and your WIP and everything. That way you're spreading your business out. You're not putting it all in one bucket.
Mm-hmm. Mm-hmm. We're going to talk about WIP, Robert.
Yeah.
We did have a question. Is there a way to get a break-even report? I'm assuming he wants an example, like you've been showing.
Yeah, that's a great question to the person who asked it. I'm going to go back, share my screen here. This is a great question. Your break even, and I'm going to use these set of financials. Now, mind you, I'm going to let the P&L, you can't see the P&L, right?
Yeah, we can see it.
Okay, just making sure. Let's put it on a quarterly basis. Your break even is based on this line here. And you can see your overhead expenses. Now, mind you, it's bouncing all around. But imagine, forget about Q3 and just pretend it's about the same as this. These 39,000, 40, 46,000. Okay, everyone with me?
Mm-hmm.
Right, and imagine this to be 40. Forget about the total. So it's 40,000. And that your cost of goods, it's better that I put the percentage of income. You know, data can really make you confused, but your percentage of gross profit is, let's just estimate 58%, 74%. Forget about Q3, please. 44. I'm just going to average this to read 55, okay? So if your average month quarterly, I'm going to pull out a calculator, is 40,000, and you divide it by 0.55, the average of these three, right? 58, 74, 44, 0.55, you've got to sell $72,000 each quarter to break even. Thank you, Robert, for acknowledging.
Yep.
It's a quick way of doing it. Did I do it right? 40, 45, what did I use as the general? 50,000?
40.
40. Divided by 0.55.
Yep.
Yeah, I keep coming up with the same number. That's your break. That means you made no money if you only sold 72. If you sold less than $72,000, you're losing money. If you only sold $72,000, you made $0 for all hours worked. Of course, this is your bare minimum, right? So every month you have to look at your numbers. Sad to say, I do it all the time for me, but you know, not to say that it's better, but you can then all of a sudden compare it against budget. Where is it? There it is. Actual versus budget. You've got tools in here available. You've got tools in here called Cash Flow Projector. Nowhere near as strong as yours, Robert. I'm serious. What we built was very powerful. There
Yeah.
is no whip in here. That we're going to discuss in about 10 minutes. So it's garbage in, garbage out. I know I keep going back to that, but if you build it right, it will tell you the truth.
Yeah, and also with QuickBooks, there's different levels, because I think in order to get the budgets and everything, there is, I forgot what level is the third level up, where you start getting a lot of these plugins.
Yeah, okay, so we're off subject, but I'm more than willing to entertain this. Oh, we need enterprise. How many employees do you have? 5. You don't need enterprise. Someone says to us, if you have Pro, it's easy enough to upgrade to Premier. And you might even see it, but we have the accountant's version, which gives a few more bells and whistles. Okay.
We have a question.
Yes, please.
As a new contractor, do you believe in the profit first system of having 5 foundational bank accounts: income, profit, owner, comp, tax, and OpEx?
Say it one more time because
Okay.
I'll try my best.
As a new contractor, do you believe in the quote unquote profit first system of having 5 foundational bank accounts? And then they list the type of bank accounts: income, profit, owner comp, tax, OpEx.
Okay, you know, I hear what you're saying. I think that's a sales pitch. What you're saying is a P&L and a balance sheet combined, and what areas should that money be in? I think that new contractor, I pray that you survive. I pray that your margins are healthy. And just running a company through 5 bank accounts and not using accounting software I can share with you that other screen where you're going to hurt yourself in the long run. Sorry for being blunt, but to ask the question, I don't want to be unfair. Yeah, and feel free, please, anyone, please reach out. my pleasure on addressing it with much more detail.
And then Ed, if it's okay with you, I send out a recap email to everyone that attended. Are you okay with sharing your email contact with them? And we can talk about it. We can talk about it separately, or they can just send it to us. Okay.
We're here to help. We're here to help. Meriwether is a blessing. Thank you, Rosa, Rick, Robert, and you two, whom I just met. You guys are a blessing.
Yes, and we also give
Strength. I'm gonna pass through this because I think I want to make sure we focus in on WIP, and we're getting later and later. 6 standard reports: AP, AR, balance sheet, statement of cash flows, P&L year to date, P&L trailing 12 months. I'd rather focus in on the WIP. Chart of accounts, 1099, flexibility, capabilities, ask my client. Okay, here, before we get to the WIP, I think this one's important. It's just a regurgitation of what you saw with the QuickBooks. As a percentage of income, if you are going after commercial buildings versus 1 to 4 housing, what are your margins for your commercial versus 1 to 4? I don't know. I'm just making this stuff up as I go. And so that you know, sure, between A and B, commercial, residential, 1 to 4, or multi-use, whatever it's called, here's your total. Why not be able to analyze the different profit centers that you are going after? Why not build a budget against it? Why not do some forecasting against this too, and see if you actually make goals for 2021? Carlos, that comment of those 5 bank accounts cannot handle this sort of questions asked. The person will be in trouble 6 months after $50,000, $100,000 of sales, and all they're using is the bank account. Then someone has to go back in and clean them up. You can see it again as a percentage of sales. How much money am I spending on operations, sales, and marketing versus G&A? What's the percentage of my overhead expenses? What's my margins, direct and indirect related? Okay. Those words, quantified data that validates managerial decisions. Kind of makes sense to me what those words are saying. Profitability analysis by different classes, commercial versus 1 to 4. Let's do some fun, okay? Robert and I, we've been working on this WIP project. I want to see you smiling over there, sir. Yeah, there we go. Thank you. Thank you. WIP reporting. If some of you are there, wonderful. This tool might enhance, and you got to ask Robert for it, not me, because they own this. But let's oversimplify this, because I'm going to show you a full-blown spreadsheet in a second. One project called 123. Contract price, Robert, chime in anytime.
Okay.
Estimated cost at $80,000 labor and materials. That means you've done your estimates. You expect to profit $20,000 over this 6-month project, say. This implies that if you've paid payroll materials of $40,000, my guess is if you've estimated to be 80, you should be 50% complete, right? Now here comes the WIP report that I have to switch over, so just bear with me. And Robert, feel free to chime in while the next 15, 20, 30 seconds, I'm trying to get to the WIP report.
Yeah, with the WIPs, like we're talking about, this is also required when you're trying to get bonds and stuff, because we need to know what your work in progress is, so they can try, your broker can work with you on how much bondability you can get, or if you need collateral, or et cetera. So the WIP is important that you know, when you start talking to your brokers.
Mhm. Mhm. Thank you for sharing that just in time. It took me a while to get out of the QuickBooks. What you were, yeah, you see the full-blown WIP report, yes? Just to confirm.
Yes.
Okay, thank you. So here's this Excel spreadsheet that we saw only from about here to there. Or maybe there, right? 50% complete because there was $40,000 of payroll already paid plus materials. And you go, well, Ed, we've billed them already $80,000. Now, everyone put on their mathematical hat on really fast, right? Revenue, cost of goods, gross profit. That's what you would expect to see at the end of the completion of the project. And you would go, wait a second, why in the world is I've billed $80,000. I'm going to delete this line really fast. How in the world, I spent $40,000. Why does this look right when I'm trying to make it wrong? Let's see, billings to date. Oh, Ed, really? Billings to date. Well, okay, there. Let's say $10,000 is all you got there. Where I'm trying to have you focus is down in this area. This is what your P&L is reading. You go, Ed, I billed $10,000. I've already incurred $40,000 of payroll. I'm not losing $30,000, but my P&L is reading that. I'm like, yeah, you're kind of right. You really should. It sounds like your billings are in excess of cost. Why not throw in the right number so that, notice the percentages now. Remember, we were saying 100 minus 80 in cost is equal to gross profit of 20. There it is. But your WIP report has to make an adjustment because you've only billed $10,000. Now, some of you might be asking, well, Ed, what if I billed $90,000 already? Just bear with me. Don't look at the bottom. 6 minus 7, 6 minus 7. Bear with me. Don't look at the bottom. Now look at the bottom. Doesn't this look right again? It sounds like you built $90,000 and collected it. Yeah, that's good. Don't buy a boat. Don't buy a boat. Okay. We have to record something in the books that says they've prepaid you a little bit more than what you should be recognizing as revenue. You should only recognize $50,000 in blue as shown below. Sure, invoice for 90, but you haven't fulfilled the work for the remaining 40. That's a WIP report, but can you imagine how complicated it can get when you get into other projects that may have a little bit slight difference in profitability, right? The numbers start going a little bit wacko. And QuickBooks, maybe the other software, Sage or something else can do it. More power to them. All you need is this spreadsheet from Robert. Okay. That's a formula. Oh, really? All right, whatever. I'll figure that part out. But it can accommodate if you are running multiple jobs. And that's what John Miller from up here in Northern Cal and I and Robert's participation have built in order for this to sing. Don't look at this unless we figure these columns out over here. But a WIP report is absolutely vital in terms of running the business. Unfortunately, we've seen a few WIP reports that are not WIP reports. That's horrifying. Thoughts, questions, Robert? I know I raised by it, but anything you can contribute.
Another thing is I advise, if you're a small company, hire someone, a consultant to do your books for you. Don't try to do it yourself because you're going to get yourself in trouble on top of that too.
Yeah, it's so true.
Yeah.
I believe it's true, but then I'd be, singing my own praises, and that's just not right.
Yeah.
It's not.
Yeah. I mean, I say, getting a consultant versus hiring, someone in your company, your overhead is gone. You don't have overhead if you hire someone to do it on an as-need basis.
Right. And Robert, I mean, we have to emphasize this. There's a cost of general administrative. It's
Yeah.
not running a business under ops and sales and marketing. You got to put a few percentages of your top line in order to support it so that you can move forward strategically.
Yep.
Strategically. 248. I'm in the home stretch here, folks. Feel free to ask. Whoa, look at that. So, WIP reports, the necessity of it. Manage your job at profitability. Know your financial reports so you get some good clarity. Simply put, the ability to sleep at night. Different area, it's for a different presentation. For those of you that want to sell your company at some point in time, valuations matter. They need good quality financials. Again, this is based on a company that we have that raised money from a publicly traded company as the lead for the syndicate. And it was a $7.5 million raise on a 60 million pre-money, which is this. If you guys are starting to think about how do I sell my company, the financials have to read properly, and we have to know who the multiples are and what's your discount rates. There it is. It's all formula driven. So if you want to know, this happens to be a different type of venture cap VC method, but we were able to raise that money based on financials. Bottom line, if you've got good quality structure, you're gonna get efficiencies down the road. It's painful at first. You've got to be disciplined in the way you manage your finances because that reporting matters. If you don't have good reporting, you're toast. Which does these three things. You can pivot a lot easier. You can run your business as best you can. Bring in the right people like Robert. Robert, any last thoughts that you might want to share as we get closer to the 3 o'clock mark?
No, just, if you got any other questions, we're here to help you to, myself and John, a few others, to really dive into your particular questions. Or if you do have your books, your spreadsheets, and you have questions, we can assist you. But, we are not here to tell you what numbers are put in there and stuff like that. We're just here to guide you and so you can fully understand it more.
Oh.
And I do have one question for you. You were talking about, Ed, about when you want to sell your company. And, you got all these liabilities and, outstanding invoices and accounts payables and stuff. So if I was to sell that, would those go with the company or would they stay with the individual?
Yeah, it depends if it's an asset sale or a stock sale for starters. Fancy answer is a stock sale means they just bought everything, the balance sheet, everything. An asset sale implies just that. They're just taking the good stuff and leaving the bad stuff alone, and it's a discount against purchase price, right? The liabilities, because they don't want to hang on to those and exposure. So more often than not, a lot of the transactions are asset sale transactions, not stock sale transactions in the smaller arena, which is the arena we play in.
Okay. I don't have anything else.
Any more questions?
Any last questions you guys want to submit before we wrap up? Please feel free to do that now. We'll give a second until I know it takes a second to type everything in. But I wanted to thank you for your time today and sharing that information with us in our class today.
My pleasure. Yeah, there is my email there. Feel free to reach out. We're available to, answer some questions should we need to.
Okay, we did have a question just come in. How do we get the WIP report software?
It's an Excel spreadsheet, and the email is robert.l@imw. Yeah, I would ask Robert. Please ask Robert. Hopefully that helps. He's got the keys to the kingdom. Any other questions? Oh, yeah, on a happier note.
I think it's, can you repeat the break even in construction again?
If those that want to stay there are more than welcome. For those that want to drop off, my pleasure. Yes.
Yes, and before you drop off, I did put the survey link in the chat. Please fill that out for us. That'd be greatly appreciated. But yeah, he's gonna go back over the break even in construction if you want to stay around for that, but you can. But we are officially done for those that have to go. So thank you guys for your time this afternoon.
Okay, thank you guys.
Thank you. I'm going to share the right screen for starters, because I forgot it's not part of Excel. It's not part of, you gotta love these sunsets, right? And was it QuickBooks? Yeah, I guess it was QuickBooks. Okay. Let me make this on a back to quarterly basis. Let's get rid of the percentages are there for a reason. So to repeat, forget about Q3. That seems to be such an anomaly. Don't look at this column. But the overhead expenses, which these are overhead expenses, aggregate 40,000 for this quarter, aggregate 46,000 for Q2, and 39 over here. And we'll use a different number. The average of these three is I guess it's 40, just call it 42,000, okay? The average. And they really should be smoothed out to begin with. So if 42,000 is your required monthly overhead expense, and your margins are the average between 58, 74, and 44, I think we said 60. Let's just use 60. Divided by, oh geez, don't do that. Hold on, $40,000 divided by 0.6, you gotta sell $66,000 worth of stuff in order to make it work, to get to break even, okay, based on those margins, okay? If you sell less than 66,000, that's a terrible number. You're gonna lose money. If you make $1, if you sell $1 more, you're gonna make approximately $1, which is horrifying. So hopefully that answers the question as to how I came up with that number. Okay. I think that's it.
Yeah, that was all the questions that I have.
Fantastic. I've stopped sharing. Thank you for your time. Thank you for allowing me to